I'm joined with Lobo Tiggre here at Red Cloud's pre-PDAC 2025 conference. Lobo, thanks for joining us.
Happy to be with you live on the set.
So let's start off with the tariff talk, because this is here in Canada. You can imagine this is basically all anybody's talking about. There was a big hockey game last week where the U.S. played Canada, and it was almost like people cared about hockey again. What's your view?
The good guys won.
Yeah. So what's your view right now on the tariffs? How do you think that this is going to play out?
Well, boy, we could spend the whole day on just this, but I mean, the first and foremost thing is it's probably good not to have too much of a view. Yeah. Like, we don't know which way these things are going to go. Nobody knows which way these things are going to go. I think Trump even knows which way these things are going to go. His shock and awe method seems to be, break things, see what happens, see what that frees up, and we'll see where we go from there. The Trump trade for 2025 that been talking about since last year was simply volatility. Not the VIX, of course, that's completely broken these days and useless. But, volatility is the one thing we can count on that has, I think, done well for safe haven assets so far this year. Despite a strong dollar. Beyond that, I think, going from my old mentor, Doug Casey, his view of make volatility your friend. So if there's something that you want to own, it's got away from you perhaps or something, then, if the wrong tariff headline comes through, that could create a buying opportunity. Right now, I mean, we just saw copper go up on this copper tariff, the newest kerfuffle. But that ain't even a tariff. That's a study group. What if the commission comes back and says, Donald, you don't want to put a tariff on copper. We don't mine enough. So, it may sound like I'm digressing, but I'm actually trying to make a key point. You may think, oh, well, this tariff will do this for this metal or this commodity. But it may have the opposite effect. Or if it's all part of the art of the deal and Canada and Mexico make a deal, or even China makes a deal. Like, everybody's all excited about China's reciprocal bans. What if those go away when there's a deal made? So this may not sound like it's helping much, but I'm trying to actually, not give you a sunshine and rainbows here. Brace for volatility sounds so fundamental, but that's the one sure thing we have.
Yeah, and Canada's Bank of Governor Tiff Macklem, he took to the airwaves on a press conference the other day, basically saying that if these tariffs happen, it's going to be very, very devastating for Canada. And we see a lot of rhetoric on social media where the idea is, just build these pipelines and start fast-tracking mining projects, but this stuff doesn't happen that quick.
Yeah, a fast-track mining project is a couple years. Yeah, that's fast. 10 years is your normal cycle. Yeah. So, but that cuts both ways. And like we just talked about copper, the latest one. Not to, diss our Canadian friends here. Well, actually, Canada is one of the bigger sources. America gets most of its imported copper from the Americas, not from China. And it's really interesting. Like, if this is the art of the deal, who is he trying to deal with? The Peruvians, are they the new public enemy number one? Or Chileans? I'm not sure what the goal is. Like, who are we trying to browbeat with this? I don't know. With Canada and Mexico, maybe there's a more direct message or deliverable there. And maybe it's completely unfair. Like, why are Mexicans and Canadians responsible for America's drug problem? Sorry, Americans in the audience, but, I just, I don't see that. But at least there's if twisted, a logic there. Like, if the U.S. can get Mexico and Canada to help it with its problem, then, I can see why. But, this copper thing, I just don't see it making any sense. But maybe a takeaway here, and I'm sorry to say this, though, is that since the U.S. has these long and permeable borders with Canada and Mexico, our Canadian friends and Mexican friends should expect more hardball dealing. And the Trump tariffs were delayed on Canada and Mexico. Delayed, not canceled. And I think probably we should expect more pain. We should expect more things to break. That's just the way Trump does things. But you know,
my viewpoint on it, and I know you said you don't like modeling it out, but if I were gun to my head, what's going to happen here? I'd predict that the U.S. government moves forward with the tariffs, it creates a tremendous amount of pain, and they're gone within 12 months. That seems like the likely scenario.
well, we do have Trump 1.0 to go on, and you know, even with China, which is sort of public enemy number one these days. You know, he came up with a deal, right? You know, he negotiated this great deal. Now, arguably, China didn't really do its part and didn't buy all the stuff it said it was going to buy. But that was the end game, right? You know, they're going to buy more of our soybeans. They're going to do this, that, and the other. Yay, we negotiated tough and we got a deal. So I can see things playing out that way. But who knows? I mean, things change.
Like, speaking about mining, we think about the idea of, let's just say we're talking manufacturing. There's sort of an argument for the tariffs, I suppose, in the sense that, okay, if Mexico's export is cheap labor, well, then maybe we want to make that more expensive to try to create some manufacturing in the U.S. But if we're talking about copper, for example, this isn't labor. You've now got to go mine very low-grade copper deposits to make that economic.
And back to our Canadian friends, you know, there's also the aluminum, right? The aluminum and steel from the last round. You know, it's not. I mean, okay, there's Alcoa, but besides that, you know, who are you protecting? And yeah, so I mean, hopefully it is the art of the deal. Hopefully none of these stick. I mean, why would you? If they do stick, right? U.S. puts 25, they put 25. You know, Trump's got reciprocal tariffs now. Let's say there's this whole round, and you know, after the musical chairs game stops, we just end up with everybody has a bunch of higher tariffs. Well, that's back where we started. The only difference would be that there would be a higher take for government. Now maybe if you're trying to fill a budget gap, maybe that's what you want. I don't know. But in terms of trying to make things more fair or make the global economy work, I mean, none of this helps. And yes, for people who love tariffs, I'm not actually, well, I'm a libertarian on the anarchist end of the spectrum, so I oppose all taxes equally. But I'm not especially anti-tariff. My problem isn't that tariffs are more evil than, say, an income tax or a regular sales tax. My problem is that we get these as well as the other taxes, right? If we were doing what they're talking about of reducing income taxes, well, okay, the tax cut extensions are in, but you know, if I would actually think, as wearing my economics hat, that tariffs as being a sales tax are actually a better way to go about raising revenue because they punish consumption. And actually, I think that's a good thing. They encourage savings. And that's, you know, that transition, and governments are always trying to encourage spending. So if you flip that on its head, it will be painful. But I think that would be very good because accumulated wealth is how you have capital to do things that need doing. So I think that'd be a good thing. So don't take me wrong. I'm not just bashing tariffs left and right. The takeaway is if there's an agenda in the White House, it's not going to be clear until after the fact. So it's very dangerous to, even though you laid out a very credible scenario, and that may be the way it plays out, you know, the roller coaster ride along the way is going to be entirely unpredictable, I think. And so if you've got a thesis like that, you've got to understand that it's highly speculative, and you've got to be able to ride out the ups and downs along the way. And if you can't take that, you know, if you can't take a 50% haircut on your way to your 10-bagger, right, you're going to get shaken out.
Yeah, it sounds like, just sort of hearing you talk about how you expect volatility, that if you're positioning yourself, you're probably holding on to a whole bunch of cash right now with dry powder, waiting to go catch some things that are going to be on sale.
Yes, yeah, that's exactly right. More cash than I thought I would be sitting on right now. But it's not all just because of the Trump trade and the volatility. There's also we've seen some correction in my favorite metals and in minerals. but not really enough to put everything on the deep discount rack. And that's kind of interesting too. People are very unhappy, the stocks are underperforming. There's a lot of negative sentiment in the mining space right now. But the better companies, the companies that are actually delivering, to the bottom line, or building the mine, or have a discovery and process that's, every round of results, it's making it bigger and better. The companies actually have something. They're doing well. They're not on sale. And even though I am the independent speculator, I think of myself as a value speculator, as contradictory as that may sound. I don't want to overpay and do the, buy high and hope to sell higher thing. I'm always trying to buy low. And despite the negative sentiment, despite the corrections that we've seen and all this volatility, actual bargains, actual compelling value propositions have been few and far between for me. So on the other hand, I've had some big wins. I've taken some profits recently. So my portfolio has actually gotten smaller, significantly smaller over the last year. And it wasn't entirely because I wanted to manage it down or prune it. There was some of that. But it was also partly just because I have reached the end point of several speculations. I'm out, and I haven't found anything truly compelling to rotate into.
Now, I recall you telling us, and I can't remember if it was going into 2023 or going into 2024. It would have been going into 2023. You said it was going to be a big year for uranium, and you were right. It ended up being a pretty great year for uranium. We're at a Red Cloud conference. They're known as the uranium guys. I got to ask you about uranium. What's going on right now?
Well, I've been getting a lot of pushback because my overall thesis is extremely bullish. The demand case, the use case, it's unbelievably strong, and that it's not changing. The math on the supply side, you can see the supply constraint. There has been some concern that high prices would cure high prices, and the low-hanging fruit of mothballed mines or low-cost mines would get built. And it was a fair question to ask whether the market would balance, at least in the near term. And I have seen that as an opportunity because I didn't think it would. I didn't think the low-hanging fruit would be enough. Based on our estimates, it wouldn't be enough. And even if it was, it would be very, very short-term. The demand case is growing by leaps and bounds while the supply is not. Right? Uranium is not rare, dear audience, but the mines that are ready for shovels to hit dirt, those are few, and they're already being built. And they're all behind schedule. They're all either over budget or behind schedule. So that's been where I'm at. I've been extremely bullish. I've been buying the dip all along. Now, lately, there is a new factor in the market, and that's Trump's talk of denuclearization. And I understand that the situation, hat tip to Justin Hume, by the way, who just put out some good numbers on this. I understand the situation is very different now from before. And I'm not saying that a new megatons to megawatts program would decimate the uranium market the way it did in the 90s. That's not what I'm saying. But prices are determined at the margins, right? So any new source of supply is a threat that you at least have to pay attention to. And markets are forward-looking, and they often get overwrought, right? Markets get overbought and oversold. So my concern isn't that a new megatons to megawatts program is going to flood the market with supply and uranium's going to go into another multi-decade bear market like it did last time. That's not what I'm saying. I am saying, though, that if this actually starts to happen, if Trump and Putin negotiate a deal where they're going to pull X thousands of warheads out of service and downblend that uranium, and let alone if they get Xi involved. Now, I actually don't think this will happen, by the way. Putin might say something, but I just can't see Russia disarming itself. If anything, we're going in the opposite direction. The Cold War is reheating, and I absolutely cannot see China disarming. They're still building out. They got a late start. They're still building out their arsenal. So I actually don't believe this will happen. But there could be lip service. They might decommission some old weapons that they don't really need anymore, or they're obsolete, and say, "Oh yeah, we're the good guys, right? Yeah, we're denuclearizing." That will affect the market, at least the spot market. Maybe not the term market, but the spot market, which affects our securities, right? So that's what I'm worried about. I'm not actually worried about a bear case. I don't think that even if there is some new supply that would make an appreciable difference to the deficits that we see going forward for many years. But the scare of it, the fear of it, the knowledge of what happened last time, and markets are often irrational. As the saying goes, they can remain irrational longer than you can remain solvent, right, as an investor. So that's my concern. I want to clarify this because people are saying, oh, you've turned into a bear. No, that's not what I'm saying. I'm saying that this is a new variable, and it's one that could actually make the market turn more irrational. Like, you can talk fundamentals at the end of the day. I agree about that. But when has this market been driven by the fundamentals? Right? It's very emotional. It gets overdone. So all I'm saying, really, I guess the bottom line here is there's now an interesting opportunity potentially ahead of us for more buying opportunities. Now, I know long-suffering uranium bulls don't want another buying opportunity. They just wanted to go to the moon now, right? But Mr. Market doesn't care what we want. And if there's a scare, right, not an actual change, not an actual surplus of uranium, but if there's a scare that puts the stocks on sale, then that is hands down, the best buying opportunity there is, because reality is on your side at that point.
Yeah.
So it may not even happen. I'm just saying, if it does, that's something to watch for.
Okay, well, Lobo, thanks very much for taking the time to sit down with us. Do you have any speaking engagements during the week of PDAC?
Well, I'll be speaking here tomorrow at Red Cloud, and yes, I'll be speaking at PDAC, I believe, on March 2nd, 3 in the afternoon in the Investors Forum, and I'll be around. I'm also organizing a reception for readers, so if you're a reader, send me an email. We'll see if there's room for you at the table.
Well, thanks very much for doing this, and let's continue to keep our fingers crossed that there are some big buying opportunities here in the coming quarters, and the next time we chat, we can talk about how much money we made off of your advice.
I'll drink to that.
Thanks for doing this.